Hello, and welcome to Pro Trader Strategies Market Commentary for Friday, September the 23rd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Some flash PMI manufacturing and services data coming out today across the pond and here in the United States. Now, these aren't as widely looked at as the ISM, which is the Institute for Supply Management, but PMI is Purchasing Managers Index, so it is still pretty important. It's a survey of the purchasing managers in the manufacturing sector and in the service sector as to what they're thinking going forward. So it's a pretty important number. It's whether or not they are going to start buying raw materials to input into the manufacturing to start producing. So it is one of the more closely looked at that I look for, and as well as for the FOMC. So they look at this as well because it's more forward looking than some of the other ones that we get that is kind of backward looking, if you will. It's already happened. Anyway, so we got the French manufacturing PMI came in at 49.5. Anything below 50 is contraction in the economy, but that 49.5, albeit below 50 and showing contraction, was a little bit better than what was expected at 48.4. We also got the services PMI, which was 54.1, higher than the expected 52.0, and on the German side, we got flash PMI for the manufacturing at 54.3, was expected 53.2, and then the services sector was 50.6 versus the expected 52.6, so lower than expected on that one. And then the overall Eurozone manufacturing PMI came in at 52.6, expected 51.5, and the services PMI came in at 52.1, expected 52.8. So that was for the European side. Then we also got Canadian retail sales came in at negative 0.1%, expected 0.5, and core CPI was pretty much in line with expectations. Here in the United States, we got our own flash PMI, Purchasing Managers Index, for the manufacturing side, came in at 51.4, which was lower than the expected 52.1. Overall markets, crude oil, looking at it, /CL is the ticker symbol for that, down $1.79 and right on resting on the fib level of the 50% fib level that we've been talking about. It was acting as resistance on the way up, and then now it is acting as support on the way down. So it's right up against that. Anything settling below that is going to be a little bit more bearish for crude oil. Onto the overall gold market, I'm a little bit surprised at gold being down on the day, down $2.60, because the overall equities are down, crude oil's down, bonds are up. I would think that gold would start pushing a little bit higher as there might be a little bit of flight to safety, but it is still down on the day. Then we look at the bonds, up 15 ticks, a half a point, if you will, but pushing higher as people are pulling out of some of their equities. This is the Dow Jones Industrial Average down 70 points on the day, right on the 50-day moving average. NASDAQ also down on the day, but only down, these are only modestly down. It's a Friday, pretty quiet today, but NASDAQ /NQ down around 12 points, probably reflective of some of those economic data points that we got here in the United States and in Canada. And then we have the E-mini S&Ps down just slightly, let's call it 6 points, trading at 2162.5. Now this is the breakdown of the E-mini S&Ps. As you can see, overnight traded right in line, lockstep with what our settlement was. It wasn't, it was basically a couple points up or down here or there, slightly in positive territory overnight. But as the overall market opened, which is right here, we've just started seeing a little bit more bearish tone to it, and are really pretty close to the lows of the day. This level right here at 2161 is really, 61 and a half, is really starting to look like a support resistance level. As you can see, just at least for the near term trader or the day trader, as you can see, it's really on the way up yesterday, acted as resistance, came down, found it as support, rallied up, and today we're starting to see that act as support again. So might be something for you day traders to keep an eye on. Then on to the things that I've done with Apple. I added a little bit of longs to this Apple trade that I have on. I already have on some short puts. Remember, I covered those short calls. I pulled the ripcord on it, but I added a little bit more short puts to this. So that's a long delta position, meaning I'm looking for a little bit more upside in there. And I did the October 111 put and sold it for $1.01. So looking for a little bit more theta decay there with that October. I already have on some October puts that I'm squeezing out for more than 50% of max profit right now, and going to add a little bit to that, or added a little bit to that position as well. So with the 111 puts. On Verizon, I added some short puts on there. Again, trying to add a little bit more long deltas with this whole FOMC holding off on interest rates. I was a little bit worried about more upside in here. So in the overall equities, I should say. So in Verizon, I did the October 50 puts and collected 39 cents for that. So those 50 puts are below where this value area is, a point of control where the most time and volume has been spent, and it's below where you can see it really kind of bounced and repelled off of that. That's going to be acting as a support level. So looking for that to push a little bit higher to for Verizon. I think Verizon's doing pretty well, especially with these Apple sales that are really positive right now. So that's another reason why I added a little bit more to the Apple. Verizon's going to benefit from some of those sales and people getting into those stores for those iPhones. So I decided to add a little bit more to that. Now with WYNN, this is one of the trades that I did for last week's webinar on being synthetic short, and I talked about this, that I looked for about a 10% retracement. This morning it came and bounced right up against this 50-day SMA, and I started looking to cover that because that was right there at around that 10%, a little over 10%, but it has really started screaming back, and I've been caught chasing it. So I'm looking for a little bit of a pullback on that. And I'm going to likely try and cover those, especially with this hammer, it bouncing off of that SMA. We could easily see it start to come back. So it's kind of met my objective, despite the fact that I wasn't able to cover it quick enough. It still met the objective, so I need to start looking to get out of that, especially with the market reaction on this rally. So that's what I'm looking to do for the today. So keep your eyes out for that one. Probably going to be covering that one pretty quick. Today's webinar is going to be on using options to protect your bond portion of your portfolio. Now, people may look at it and say, well, hey, the Fed isn't going to do anything anytime soon. But at the end of the day, if they start raising rates, we're going to be behind the ball on this. So behind the 8 ball, like stymied. We're going to be trying to play catch up. So I'm looking at it like we're going to try and get ahead of this. I don't really see bonds really rallying to all-time highs and having those interest rates go to all-time lows. So I think this is going to be a good time to get ahead of the curve there and start collecting some credits in the case that they start raising interest rates, sometime in 2017. We'll be able to collect a lot of premium for that, get ahead of that game, and so it won't hurt so bad when they start raising rates, because most people have about 50% of their portfolio in bonds. So this is extremely important to understand how we can take advantage of that type of situation, how we can start collecting credit on that portion of our portfolio, because so much time I've spent talking about the equities, that we need to go back and look at our bond portion of our portfolio, because that's 50% of our value. So, all right, check that out. Go to protraderstrategies.com. That's all I got for you today. If you can't take that, take it easy.